Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This week could mark the longest bull market in history by completing some 3,400 days of rise in the markets. Arvind Sanger, managing partner of Geosphere Capital Management, joins us now. Good evening, Arvind. Thank you very much for sitting up for us. But then we want you to join in the celebration that the bulls have been having on Dalal Street day after day. What's the lesson? Step into it, move with the tide, or stay out because you think it's too ferocious?
Well, I think the most heartening thing is that the earnings are starting to show up in a meaningful way, and the economic data in India, other than obviously what's going on with the rupee, but every other economic data point that we look at from a bottom-up standpoint, whether it is you mentioned I think in your segment earlier about what's going on with airline traffic, but we look at airline traffic, we look at hotel traffic, we look at auto sales, we look at commercial vehicle sales, we look at electricity demand. You look at almost any economic statistic, and things are going gangbusters. So I think that the earnings season was one of the best we've had in several years in terms of both top line and bottom line growth. And I think the market's getting confidence that, notwithstanding modest weakening in the rupee and the political uncertainty before an election year, the economic fundamentals from a bottom-up standpoint are very solid.
Okay. Arvind, hi, good morning. What about Indian market? Because we have seen after a long time the market breadth improving, the mid-caps are participating. You reckon the 3 or 4 month period that we had of a big bear market in mid-caps, is that over?
I think it looks like the mid-caps are also riding the wave of good economic fundamentals. So, again, the global risks notwithstanding, and I think the global risks, we have lived through some of the fears. Global trade war, that fear seems to be somewhat receding. It doesn't look like that's about to break out in a big way. And Fed rate hikes, I think the market's gotten used to the fact that the U.S. Fed is on a steady rate improvement cycle, but is not looking to do anything dramatic that'll cause liquidity to dry up. So as long as the global cues remain well behaved, the Indian economic fundamentals are such that there's no reason that the mid caps should be left behind. And I think the Indian HNIs and others who were hurt in the last few months with the massive sell-off that the mid-caps saw, you're starting to see money come back. So I think all of those reasons suggest that mid-caps should also start to participate. So yes, one of the things that you mentioned that I think is very important is we had talked a few weeks back when the rally was very narrow. What is encouraging now is that the rally is much more broad-based, and I think that that's a more solid way for the rally to have legs.
Actually, I wanted to take that point forward because we are seeing a sort of a secular move in the market over the last couple of weeks. Whether you talk about participation coming in from L&T, corporate lenders have picked up. Reliance, of course, has assumed leadership for the last few months. Where do your preferences lie now?
Well, I mean, our preferences have always been with bottom-up stories where fundamentals are improving. But, we think some of the export-oriented, auto parts companies are certainly benefiting from a weaker rupee. The IT names obviously are benefiting from weaker rupee. But, the economic fundamentals domestically, there were some fears about what's going on in the CV market because of certain regulatory changes. But I think the CV market seems in good shape. I think the domestic auto market seems in good shape. I think the infrastructure spending seems in good shape. So plays on all of those. And then, Reliance is really a play on domestic, both consumer in terms of the retail franchise and on Jio and their telecom franchise. And I think there's, good strength and there's future opportunities as the broadband distribution in India grows. People who benefit from that or play on that could be winners as that plays out. So I think there are emerging themes. I think some of the banks, laggard banks like ICICI Bank, have been huge winners as people are getting past the concerns about the leadership issue and looking at the fact that economic fundamentals are improving. and the bad debt cycle, whether it's for some of the PSU banks or for some of the lagging private sector banks are behind us. So I think the financial sector, there are some of the laggards that look quite interesting in that space too. Okay.
Do valuations worry you at all? I mean, we are trading at perhaps one standard or sometimes maybe even more deviation to our normal price to earnings. So many would argue that there's excellent earnings. We have people telling us that it's going to be 25% compounded annual growth for both this year and next. Would you worry that that's also in the price?
Well, certainly, if you look at some of the high-flying market leaders, I think that's a worry that is well-founded. But I think that's a worry that could be shared across the globe. If you look at the technology FANG leaders in the U.S., there's been similar concerns expressed there. So I think we're not in the early stages of this bull market. Let's be clear about that. So one has to look harder to find values, and one has to find emerging themes. We think things like the hotel industry, the travel industry, some of the emerging themes, even things like real estate, which have lagged. That's where some of the values may lie because the cycles are just beginning. But there are other parts of the cycle which are very far along where valuations are rather rich, and we have a hard time investing there. So I think that's the problem with making a market call. The market clearly, as you said, is not cheap, and that's what creates a challenge. But that's where the mid-cap opportunities come in, because some of the stocks value.
Will you look at real estate, Arvind?
Yeah. Yes, I think that's an emerging theme for us. That's a market segment that has been left for dead for a long time. Post-RERA, it is creating a market for organized players to gain market share. And there is pent-up demand. And so I think whether, people have played it largely as we have in the last few years by playing the NBFCs, which are, providing mortgages to real estate, to owners. But I think the opportunity now could switch to a sector that has been hugely overlooked and highly underperformed, which is some of the real estate companies themselves.
Oh yeah, and DHFL really has been one of the stocks of the last few days, along with, of course, a couple of real estate plays. Arvind, let's not forget we are almost at August end. Just 2 or 3 months to go for 4 big state elections, and then, of course, next year the general election. There was just one opinion poll about 2 weeks back which indicated that perhaps things could not be too good for the ruling party, at least in the 3 big states. You reckon as we move forward that could be a bit of a spoil spot for Indian market?
Well, I think the political risks that the market was worried about 3 months back are unlikely to disappear. So I think they will recur as we move through the year. That is going to be, if I look at headwinds for the market, and let's talk about that, we've talked about all the good stuff. If you look at the headwinds for the market, then, the political uncertainty leading up to the elections, which, for the Lok Sabha, which I guess could be held anytime between, later this year and May of next year. We don't know when those will be, but that will be an overhang on the market. I think, the current account deficit and the rupee and what happens there is another headwind for the market to the extent that it affects inflation. But certainly for us as overseas investors, rupee dollar is a headwind. And then global cues on trade war and other things that could upset the apple cart. So those are things. But India specific, I think the 2 things to worry about are the elections and the rupee and the current account deficit.
So is this, a rising tide lifts all boats sort of situation globally, Arvind? Do you think for the rest of the year it's going to be, a US market-led recovery which will take emerging markets higher as well? Or do you think emerging markets could now start outperforming developed markets for the rest of the year?
Well, emerging markets have clearly been laggards, but I think for them to outperform, they still need the US market and the global developed markets to stabilize and maybe to move a little bit upwards. So I think the best scenario would be that the U.S. market continues to, be stable to upward trending, the dollar stops, being as strong, and the Turkey-related contagion fears to emerging markets subside, and then we can start to see an emerging market rally. So for that, a couple of things need to go right, but the most important one is that the emerging market fears, that have been emanating from the Turkey situation and the spillover we've seen in some of the other countries like Argentina, if those start to stabilize, then I think that provides an all clear for emerging markets. But if the currencies stay weak and there's fear of currency-driven contagion, then emerging markets would not participate. So I think we're hopeful that the Turkey issue is containable and it's not going to cause broader pull down of emerging markets. So this could be a time for emerging markets.